Welcome back to the deep dive. It's January 8th, 2026, and the ground is really shifting under the global economy.
It really is.
Today, we're going to try and synthesize what the Financial Times and the Wall Street Journal are seeing, because the world seems to be defined by two, well, crushing new forces: armed resource grabs and algorithmic control.
Right. And our mission is to connect those huge seismic events directly to your finances, to your career.
So where do we even start?
Well, the most shocking thing, I think, from both sources is how fast the old rules are just dissolving. The whole concept of international law or even national sovereignty.
It's being practically abolished.
Exactly.
Yeah.
And the proof is the U.S. government seizing Venezuelan resources, and this is the critical part, vessels sailing under foreign flags.
That sets an incredible precedent. It basically says your assets are only safe until a bigger player decides they need them. Okay, so let's connect that naval power move directly to your wallet. The U.S. is taking this very direct action to force down global oil prices. We're seeing it with the seizure of tankers like the Marinera.
And this creates a really counterintuitive paradox for you as a consumer.
How so?
Because, yeah, this strategy might mean cheaper gas at the pump. But the total cost of almost everything else you import, electronics, medicine, you name it, is about to go up. A lot.
And that's the part people will miss. The inflation isn't from raw materials, it's from logistics, it's from security.
Precisely. Maritime trade routes are now being treated like, well, combat zones. They're subject to seizure, they need military escorts, and that has created this huge hidden crisis.
The crisis in maritime reinsurance.
Right, the insurance that ships and cargo need to cover war, seizure, loss at sea. Lloyd's and the other big players are just skyrocketing their premiums.
Because the risk is now military, not commercial.
Exactly. So the final cost of literally anything shipped by sea could jump by, say, 30 to 50%. That's inflation driven by the cost of movement itself.
Wow. So naval power is setting the price of goods, and at the same time, algorithms are setting the price of labor. Let's pivot to that second force: automated obsolescence.
And the speed is what's so startling. AI isn't just replacing artists anymore. It's replacing high-volume, repeatable tasks everywhere, way faster than anyone thought.
The examples are what really drive it home. We're not talking about tech firms. The sources cite Waste Management.
The garbage giant.
Yeah, and JPMorgan. Both are rolling out these massive algorithmic replacement programs for human workers.
It's a clear signal. Automation is now just cheaper and more reliable than people, even for huge, historically low-tech jobs.
So what's the takeaway for your career? What do you do?
You have to become, for lack of a better word, unautomatable.
Meaning
you either need to manage the AI systems themselves, or your role has to involve complex physical work, real creative novelty, or, high-level emotional contact. Think complex negotiations, not data entry.
So the routine office jobs, the so-called plankton, are the first to go.
They're in the most immediate danger, yes.
And if you put these two forces together, this new warfare economics and mass automation, the sources point to two, wildly different futures.
They really do. The FT sketches out what they call the oil patriarchy.
That's scenario A. The U.S. successfully controls oil prices, OPEC Plus becomes irrelevant, and globalization just fractures.
It collapses into these regional militarized trade blocs,
Right.
where just doing business, simple trade, requires a military convoy.
But then the WSJ has a competing vision, scenario B, the internal fault line.
A totally different threat. Here, the U.S. gets consumed by chaos at home. They point to flashpoints like, say, mass riots after a critical policing incident.
And at the same time, this insane technobubble inflates. The number they throw out is Anthropic being valued at $350 billion.
Right, and that number is so important. It represents this massive concentration of capital into AI ownership, which creates this unbridgeable gap between the AI owners and everyone else.
That level of inequality could threaten the stability of the dollar itself.
It could.
So, given these two very different risks, how do you protect your assets?
Two big strategies emerge. First, don't save in commodity-based currencies. The U.S. is actively trying to push those quotes down, so you'd be swimming against the tide.
Okay, that makes sense.
And second, you have to filter your jurisdictions. Keep your assets geographically far away from the major conflict zones. Washington, Beijing, Moscow. You want to be somewhere quiet.
So our final verdict here, pulling all this together, is it's pretty stark. The free market as we knew it is over.
Yeah. We're in a new era. Prices are set by aircraft carriers, and jobs are handed out by algorithms. You have to adapt your strategy now.
Which leaves one last very big question for you to think about.
If the idea of international law is functionally dead, and countries seizing assets is now normal, what does safety for your personal wealth truly mean anymore? And just how far do you need to go to find it?